Hi, good evening, everyone. Now, I'm not quite sure whether you can hear me or not. You can see my slides. If you can hear me, you can see my slides. Can you please just type in the chat box yes? Very good. Some of you, I can recognize your name more or less right now. Some of winners of people, I just noticed that. Well done. Very good. I can see that some of you, yes. Okay. Now, welcome to our Let's Learn Futures webinar series. Now, this webinar series is brought to you by Bursa Malaysia and managed by our company, Excellent. So our topic for today is a very, very interesting topic, trend trading the futures, because you need trend to make profit. So this is a very important and very interesting topic. Now, as usual, our session, we are going to divide into two different sessions. The first 60 minutes will be presented by our speaker of the day, CY So Chuen Yen, and the final 30 minutes, we are going to open for Q&A session. Now, my name is Ting Ting. I'm your moderator for this session. Now, please make sure that you can hear us and please make sure that you can see our screen. If you can't hear me, nothing much that I can do for you. Technically, you just need to follow the screen. So I'm going to give you 2 seconds for you to follow the screen, and or else you can just change your device. Now, as usual, please make sure that you turn off your video to have a better quality of the session. You know that our Malaysian internet is a bit weak, so that's the reason why you need to make sure that you turn off the video. Now, along the way, if you have any question, you don't need to wait until the end of the session to ask the question. Along the way, if you have any question to ask the speaker, you can click on the Q&A box and type in your question. Subsequently, please send to all co-hosts. Can you see that? Please make sure that you send to all co-hosts so that we can pick up your question. Please do not type your question in the chat box. I repeat, please do not type a question in the chat box because we might not be able to pick up your question via the chat box itself. So please click on the Q&A box and type in your question and send it to all co-hosts. Now, I'm not quite sure whether you're aware or not only for today's session itself, upcoming, we still have 3 final sessions. So we are going to have the next session next Tuesday itself. Every Tuesday, we are going to have this Let's Learn Futures webinar series. We're going to organize in different topics, different languages. We are going to have it until middle of December. I believe the last 2 weeks, right? Definitely you are not going to attend any class because you are going to have your break. So upcoming, we still have 3 topics. 30th of November next week, the technique pivot point untuk mengesan peluang dagangan yang baik. This is a very interesting topic because you will understand why you are going to use pivot point and how can you use this. And subsequently, we're going to follow by another topic called modern technical analysis in the new era. This particular new scenarios. So we need to understand what are those modern technical analysis. I believe many of you heard before technical analysis, but you might not really hear before this modern technical analysis itself. And we are going to conclude the year with the final session, which we are going to organize in Mandarin. So for those who can understand Mandarin, this is a trading psychology topic, which I believe many of you are facing with the current scenario. Now, for registration, what you need to do is you just need to scan on the QR code, and or else later we are going to type in the chat box the link. You can click the link and register accordingly. Now, besides this Let's Learn Futures webinar series, Bursa Malaysia Derivative also bringing in this East Malaysia CPO FIBO webinar series as well. We already conducted 2 sessions, so this is the final session for retail. We are going to organize this on 24th of November, which is only tomorrow. And this is the crossover between Chicago Mercantile Exchange and also Bursa Malaysia Derivative. So you're going to see both speakers are from both exchanges. They are going to let you understand what are the commodities that you can trade under both different exchanges, etc. And how do you use it to diversify your current portfolio. So this is a very interesting topic. So please do not miss the particular session. For registration, the same link. the same QR code as well. The link, I can see that our admin already placed it in the chat box. You can click that particular link and you can register accordingly. Now, the last one that I'm going to introduce is this online workshop. For many of you, I believe you already attended this online workshop. And just for information, this will be our last session for the year for this online workshop. Now, this is not suitable for all traders. This is specifically for beginners and for those seriously wanted to kickstart in their futures trading, and this class is meant for you. So please do not simply register, only you are interested, only you register. As this class, we have limited seats, and currently we are really very near to full. So for those who are interested, you want to kickstart in this in futures trading, you can register this online workshop. So we have two sessions. The first session is the complete guide for beginners to futures trading and trading simulation. And second session, we are going to cover how to create an effective futures trading plan. And we are going to incorporate the trading simulation as well. So for those who want to kickstart in futures trading, we are going to cover from A until you are able to submit and trade your first futures contract. So if you are interested, scan the QR code and register accordingly. As usual, this class is limited to first 50 online attendees. So we are going to open for 150 at registration, but please make sure that on the day itself, only based on first come, first serve, we are going to open for first 50 online attendees. Now we're going to introduce our speaker for the day. So our speaker for the day is CY So Chuen Yen. So CY is a chartered market technician, chartered owner. So in short, he is definitely the master, and also his specialty is for today's session itself, our topic for today. So today's topic is definitely his area of expertise. And he's also a certified master trainer of neuro-linguistic programming, NLP, and also a performance coach with extensive experience in coaching individuals with performance improvement, behavioral change, self-empowerment, and personal breakthroughs. So his specialty is in training system and strategies, training psychologies, and also coaching. So we are going to start with the session. I'm not quite sure whether you are ready or not. I believe definitely our speaker, he is ready. So CY, I'm going to pass it over to you.
Okay, can you see my slide up right now? If you can see my slide up, then type in a yes or put an OK sign so that I know that you are able to see my slide clearly. Now, when it comes to trend trading, a lot of people have this what we call the love-hate relationship regarding to trend. So good evening, everyone. How are you doing? So I hope everything is fine and going well on your side. So today's topic is a little bit on trend trading the futures. So this topic, I will not be focusing on trend trading strategies because what strategies to trade trend, probably I believe you already know because a lot of speakers cover that topic already. Now, today, I want to share with you more on the trend trading philosophies, okay? The trend trading philosophies, the core concept behind trend trading, and most importantly, you need to understand why most people, although they say they like trend trading, but ultimately they are unable to do so. I'm not quite sure about you. Maybe you experience the same thing as well, correct? Because there are several key challenges you need to address first so that you can actually take advantages of trend trading. Because when we want to trade trend, right, a lot of people wants to go do trend trading, but ultimately you are able to just only capture small trend and then you miss out the whole big trend. So in this session, I will clear some of your misunderstanding as well as a misconception about trend trading so that you have a clear mind what a trend is all about. And when you really actually put your money in the trading, you actually really experience the trend. Like it or not, you got to accept it because that is your goal of trading. You need to accept the nature of the market. So today we will be focusing more on the philosophies of trend trading. Okay. Now, a quick disclaimer here, this session is for educational purposes only, to give you a quick understanding and knowledge about trend trading for futures. Of course, this is a standard quick disclaimer where this is for educational purpose only. So I give you a quick 3 seconds to look through it. 1, 2, 3. Now, I believe Ting Ting has already introduced me and I don't have to reintroduce myself. Now, let's get started directly into trend trading. Now, of course, this webinar session, I will be organize this topic into 5 main things. The first topic would be why all types of analysis focus on trend. So later on, I'm going to share with you not just only technical analysis looking at trend. Fundamental analysis also need to look at trend in order to profit from the market. Okay, you don't have to be surprised on that. Now, topic 2, which is the types of trend by time frame. There is always a trend in the market. And the question is, what are the time frame that you are actually looking at? So once you understand this topic number 2, you will no longer have to ask your friends or someone else just to confirm what the trend is in the market. Because all you need to do is actually to select the time frame that is most suitable for you and then focus on that time frame will do. Topic number 3, which is the paradox between trend as well as volatility. This is very important. Make sure you listen to this because I will explain to you why you have the love-hate relationship with the trend. I understand that you love trend. I love trend as well. While at the same time, you hate trend and you dislike trend. So here, I will explain to you why there is a paradox between trend as well as volatility. And lastly, I will briefly share with you what are the tools for trend trading strategies and what are the tools available out there that you can use for trend trading. Now, let's get started with the first topic. And do you know why you need trend to profit from the market or not? Because I believe most people say, you need trend to profit from the market, right? And most of the time you just follow it blindly, but you are not quite sure why do you really need trend to do that. Later on, I'm going to explain to you why. Now, if you were to read books on trading or even investing, regardless of whichever languages you read, majority of those books, they actually emphasize on trend. And the number one rule for trading is actually what? Following the trend, right? Number one rule of all types of trading is actually following the trend. Uptrend, you buy only. Downtrend, you sell only. Okay, nothing else. Now, although this principle sounds very easy, but when it comes to real life practice and the real life actual execution, many people don't have the discipline to follow this simple rule. Now, let me show you this. Trend trading, in fact, is actually not a new thing. Ever since there is, the stock market is available, or even before stock market, we are actually doing the trend trading. Even if you are doing businesses, right, you also need to follow a trend. So there are other similar terms when it comes to trend trading. So now I would like to introduce a few terms for you so that when you see these terms, you understand that, they are actually referring to trend trading. Now, here are the few terms that is related to trend trading, which is the short-term trading, swing trading, trend following, or position trading. In fact, all types of trading needs a trend. Even if you are doing intraday trading, you also need an intraday trend, correct? Now, in short, all of them, the similarity is that you actually need a trend and you profit from a trend. If a market is very flat, let's say you buy at $1 and the price don't move at all, okay, the price at the end of the day still remain at $1. So this is, there is no trend in there. So you are not going to profit without anything. Now, the main differences for all of these types of trading is actually the time frame, okay? Short-term trading, it focuses on a short-term trend, whereas for trend following or position trading, you are actually focusing on a longer term trend, where you hold your position a little bit way longer. So these are the major differences between trend trading, which is only the time frame itself only. So when you have different time frame, of course, the strategy that you are actually using would be significantly different as well. So all of the strategy that you're actually using is actually very, very closely related to the time frame. Now, let me ask you this question. What do you actually understand about trend? Now, you can type in whatever that comes into your mind. What are the keywords that is associated or related towards trend? I give you 20 seconds to do that, okay? Now, I would like to know what is your understanding about trend. You can type whatever that comes into your mind, whatever keywords that is closely related to trend, okay? Type into the chat box. Let me know what is your understanding about trend. So I see some of you have already put in. Some of you put higher high, higher low is a trend. Lower high, lower low is a trend. Trend is your friend. Some of you put pattern, direction, uptrend, downtrend, direction. Okay, so later on you are going to learn some of the new terms. Okay, so most of you would say market direction as well as the characteristics of trend. Now, let me show you a more comprehensive definition. Let's see whether your definition fits the comprehensive or the complete definition or not. Now, the definition for trend in English is actually this only, okay? It mentions that it is a general direction of changes or development. So here we have two main keywords. And what are those? The first keyword is general direction, and the second keyword is changes and development. So I believe a lot of you actually just only get the definition on the left hand side only, which is the general direction. And of course, yeah, you are correct. The general direction for a trend, regardless of whichever market that you trade, there would be an uptrend, downtrend, as well as a sideways. However, on the right hand side, this small part of the definition, very less people actually get it. Even though for me, initially when I learned trading, I don't understand what is trend all about. Even though, when I learn study about finance theories, I still don't quite understand what does does it mean about risk or trend or volatility. Now, if we put everything together, trend definitely has changes and development, which means there will be ups and down movement, changes in price. There would be a fluctuation as well as a volatility. And fluctuation and volatility, this two thing is neither good or bad. It is actually very, very neutral. The most important thing is that you need to be in the correct general direction. Okay, the most important thing that you need to be is actually in the correct direction. Then you don't have to be afraid of the volatility as well as fluctuation. It is important for you to really, really understand trend. And most people focus on how to trade trend, but they don't really understand the philosophy or the nature behind trend, because trend is not just only up and down or sideways, right? It also includes fluctuation and volatility. There will be changes. Why? Because it is easy for you to find an entry point to trade a trend, correct? Can you agree with that? But it is very, very hard for you to actually sit through the whole trend, because there are a lot of things happening as well as involving in the market. There are a lot of news that is coming in, news that you like or news that you totally do not want to hear because it actually affects your judgment. So all of these things, when you sit through the trend, what you will be experiencing is that there will be a lot of things from left or right that would be actually affecting your trading psychology as well as your trading decision. So whenever you face fluctuation or volatility, in order to protect yourself, what do? You take profit too quickly, or you cut loss too quickly. And worse, if for most people is that if you are unable to do your cut loss, you just, you get stuck and hoping that the trend will come back again. So in short is that when you understand volatility and fluctuation, you won't be having so many problems in trading the trend because you understand the nature of trend. Now, there are, of course, as you know, there are two types of analysis in the market to identify trends, which are fundamental analysis as well as a technical analysis. For fundamental analysis, let me show you there are trends in fundamental analysis. Okay, so these are the things that you need to know. So let's look at Malaysia GDP. So this is a quick overview of Malaysia GDP from year 2011 up till last month. So here we can see that, look at the bar chart. We can see there are uptrends when, each and every year the GDP increase. On the next fundamental factor that you can see, which is our Malaysia unemployment rate for the past 10 years. Again, here you can see there would be trend as well. There are uptrend, there are sideways, as well as there are downtrend. So in short, now you see when you look at fundamentals, right? Uptrend is when there is improvement in the economic indicator or there is improvement in economic data. Downtrend in terms of economic indicator is that the fundamental factors is actually getting poorer or slowly deteriorate. Now, another factor on fundamentals when it comes to that is related to palm oil sector. So this is this data is taken from MPOB, where they actually project the production as well as a consumption for our Malaysia palm oil. So here you can see there is an uptrend here. And lastly, which is one of our biggest plantation company, here you can see the trend as well in terms of their revenue, their sales, as well as their income. So again, here there is a downtrend as well as uptrend. So in short, let me summarize this is that anything other than trading price, right? Anything other than technical analysis, you can consider as fundamental analysis. So fundamental analysis has trend as well. There are uptrends as well as downtrends. Whether the data is positive or negative towards the price movement whenever you are trading. So you need to equip yourself with the necessary knowledge in terms of how to read fundamental data as well as learn how to digest those data. Now, in technical analysis, this is an FKLI weekly chart. Here we can look at trend as well. There is uptrend, there is sideways, there is downtrend. Of course, I believe you understand this very easily. For FCPO, this is a weekly chart. Here you can look at there is a downtrend. There are times which is a sideways, and there are times which is also an uptrend. So in short, now we can conclude that whether you trade or whether you invest, you need to follow the trend as well, not against the trend. And both fundamental analysis and technical analysis, the knowledge in these two areas, right, ultimately is actually to analyze trend, and then for you to make investing or trading decision, whether to buy or whether to sell. So in short, if there is no changes in price, there would be no trend. And if there is no trend, meaning that there would be no changes in fundamentals, same thing as well, there would be no trend. So in short, one thing that we can conclude here is that both fundamental analysis as well as technical analysis, they actually analyze trend. Now let's move into topic 2 a little bit quickly. There are few types of trend, which is depending on time frame. And most of us just look at, when there is up market, then there will be trend, down market, there will be trend. In fact, if we were to classify in terms of a time frame, you will definitely see things differently. Now, number one assumption of technical analysis that you need to know, if you were to use technical analysis, you must understand this very, very important principle, which is price actually move in terms of trend. In fact, this is not just only the assumptions of technical analysis. In fundamental analysis, the assumption also goes the same thing as well. Price move according to trend. When the fundamental improve, there will be an uptrend. When fundamental getting poorer, there would be expectation of a downtrend, right? So fundamental analysis also follows the similar route. Now, there are generally three kinds of trend. Can you let me know what are the three types of trend? Okay, I repeat my question. Do you know what are the three types of trend? If you know what are the three types of trend, type in the chat box. Let me see your understanding, whether you get it correctly or not. What are the three types of trend that you know? So most of you put up, down, sideways, consolidation. Okay, now so okay, most of the time, most of you put uptrend, downtrend, sideways. Now, according to Dow theory, something new that you will be learning today, okay, there are three kinds of trend. So what Dow theory he says is that three types of trend according to him is actually primary trend, which is long-term trend, secondary trend, which is the medium-term trend, so it will last between weeks to even months, and lastly, which is the minor trend, your short-term trend, days to weeks, okay, or even intraday. So these are actually all minor trend. So according to Dow theory, there are primary, secondary, and minor trend, long-term, medium, or short-term trend. Okay, so here they never mention about up, down, or even sideways. Okay, so up, if your answer is up, down, or sideways, those are actually direction of trend. So remember earlier on our first definition of trend, which is general direction. So up, down, and sideways is actually referring to direction of trend. But these three kinds of trend is actually referring to the time frame of trend. So it is very important for you to take note of this, and later on I will give you a quick example to see what are the trends that you are actually focusing on. Now here we can see that there is x-axis, which is your time, and y-axis, which is your price. And then later on I'm going to show you the three kinds of line, which is a primary trend, secondary trend, and a minor trend with different colors. Now the first trend, which is your minor trend. Now, can you see that the minor trend is something like your heartbeat, when your heartbeat is actually very fast? If you look at your, what does that call in hospital, your ECG heartbeat rate, your heart monitoring rate, right? So it would be like fluctuating around. So this is what we call the day-to-day trend fluctuation. It is very volatile. And similarly, if we were to look at secondary trend, we can see that the secondary trend would be a little bit more smooth. Okay, so this is actually secondary trend. So if you want to see a trend that is a little bit more smoother, not so volatile, you can actually switch from your day chart into weekly chart. So your weekly chart would be easier to identify secondary trend, which is a little bit smoother. And lastly, which is what we call the primary trend. It is even more smoother. You don't see so much volatility up there. Okay, now let's combine all of these three minor, secondary, as well as primary trend into one single chart, so that you can see what is the impact or effect out from it. So here now, look carefully on this chart as I animate this slowly. So here you can look at the minor trend, which is your day-to-day fluctuation. And the same thing, you know, if you were to ask some other traders if they were to focus on secondary trend, or if they their strategy is actually focusing on medium-term time frame, then these are the things that they would be looking at. Can you look at that? The movement in lines. So this is actually the secondary trend. And lastly, if let's say, for example, if you were to say Warren Buffett, who focus on a primary trend using fundamental analysis, again, you can look at how does the green line actually moves. It's even way smoother, and it actually looking at a very big general direction. So here you can see that, let's say in the market, we have these three general types of market participants. Each of them actually experience the same market, right? Everybody experience bull market, bear market, everybody experience COVID market as well. However, what we actually experience or see things would be very, very different. So depending on what are the time frame that you're looking at. Again, another example, let me show you what is the primary trend. And this is the FCPO market. So here, the primary trend we can identify here is an uptrend, a big general big one. And secondary trend would be somehow, there would be a lot of small secondary trend that makes up one big primary trend. If you don't understand this, never mind, later I give you an easier example. And lastly, which is your minor trend. A minor trend is day-to-day price changes and fluctuations. So that it actually consists of a very, very small day fluctuation. So here you can see a combination of minor trend will become a secondary trend. And the combination of secondary trend will become a big primary trend. Okay, so in short, it's actually it is actually referring to just only the time frame. If you don't understand this, let me give you another quick analogy, which is, in simple words, your trend is just like your time. Okay, so let's use time as an analogy, as an example. So in short, your primary trend is just like a year. Okay, in every year, 1 year got how many months? You will say 12 months, right? And in the month would have how many weeks? You would say 4 weeks. So month and week would be somehow like your intermediate or your medium term trends, your secondary trend. And in a week, we have 7 days, and every day we have 24 hours, and 1 hour we have 60 minutes. So the day, hour, and minutes would be considered as the minor trend. The fluctuation is very fast. And of course, the fluctuation would be relatively small as well. So this is a general concept of the three types of trend according to time frame. Can follow? Now, most important on time frame is that you need to understand this important concept. Whichever trend that you are trading, you need to have the patience, because whether you are trading minor trend, secondary trend, or primary trend, long-term trend, you need time to develop. Okay, you need to have patience, you need to tolerate when riding the trend. And the most important thing is, can you actually survive the whole trend? Because I believe a lot of you may have learned technical analysis through books, YouTube, or attended a seminar before. I believe you can also identify an uptrend, downtrend, and sideways, right? And the most challenging thing is actually sitting through the trend, having the tolerance to see your profit fluctuate as well, right? Because as long as you still have position in the market, your profit or whether your loss would continue fluctuate. And most people cannot survive this because of the minor trend fluctuation. They look at their price fluctuation every single day. So this is actually the thing that actually leads you to be, very tempted to get out of a trend too quickly by either taking profit too quickly or setting a very, very narrow cut loss. Now let's go into topic number 3. This one would be a little bit more comprehensive and detailed, so you need to pay attention to this. It's very important for you to understand the whole concept of trend as well as volatility. Now, the 3 direction of trends, I believe you already understand it. There will be upways, uptrend, sideways, as well as downtrend. And the characteristic of uptrend would be there will be higher high as well as a higher low. And the downtrend characteristics would be lower high as well as a lower low. Now, another concept that you need to learn. Now we learn separate concept first, and then later on I will give you a quick example to put all of those pieces in together. So now that you have already know the 3 main directions, now here you need to also understand what is volatility. Generally, when we mention about volatility, there are 2 types of volatility, which is your intraday volatility as well as your overnight volatility. Now, intraday volatility, let's look at it, which is actually the difference between the day high as well as your day low. So for example, for a typical day, if let's say the high of that particular day is 5,000 points and the low for that particular day is 4,800 points. So here we can say that the day high minus day low, which will be the 200 points of difference. So this is what we call the intraday volatility. Now, I understand that most of you, when you look at intraday volatility, right, you would see, if a particular day is very, very volatile, you can see that it goes up and comes down many times, right? Sometimes two, three times of 50 points or even 100 points or a few rounds in a day. So in fact, that would be what we call a very, very minor short-term volatility. But if we were to look at, if you, let's say you were to buy at opening price, close your position at closing price. So this is the general intraday volatility that we are looking at. And next would be on the overnight volatility. And this is actually the differences between 2 days closing price. So let's say if you have yesterday you have a trading day, and today you also have a trading day. Now what we want to take is actually the differences between the 2 days closing price. Now we want to take today's closing price, which is 5,100, and yesterday's closing price, which is 5,000. So here we can see that the difference is actually only 100 points of volatility. So now here you can see that, with just understanding the volatility concept, right? So you sometimes may hear that some traders would say, in a day, the volatility is very high, but some other traders would say, the volatility not really high, the volatility is actually quite smooth and steady. So this is the differences that they are actually referring to. Intraday volatility as well as overnight volatility. So in fact, you don't have to be afraid of volatility, especially if you get the direction correctly. Now, can you look at this chart? This is also a FCPO chart, and the line on the chart, I believe you can more or less guess what line is this already. This is actually what we call the moving average line. It's a very commonly used technical indicator, and probably is actually the most popular trend trading indicator that is very commonly used. Now, a very, very simple trading rule for this moving average strategy is that whenever price is above moving average line, you buy only because it is an uptrend. And when the price is below the moving average line, you identify it as a downtrend, so you sell. Okay, can follow? Price above moving average line, you buy, is an uptrend. Price moving average below your moving average line is a downtrend, so you sell. Now let's put this into actual practice. So now let's say you have identified an uptrend. You can see that, this particular day, the closing price is actually above the moving average line, right? So you're happy it is an uptrend. So you enter at this particular price, 2,940. Now, my question to you is that when the market comes out to 3,390, would you sell in the market or take profit in the market? Let me know what would be your answer. When the market reaches 3,900, so which means in short, you will be having 450 points, right? So times $25 per point, you will have $11,250 already. So I see most of you would put take profit, right? And very, very few of you would actually put hold or keep. Some of you will put theoretically hold means you are going to take profit, or are you going to hold? So most of you actually take profit. And if you don't know, then it would be, you need to make sure that you still need to make a decision, okay, whether to hold, do nothing, or take profit. Now, for those of you who hold, okay, let's assume, let's do a quick trading simulation. You have already take profit. For those of you take profit, take already. For those of you decide to hold already. And for those of you who don't know, assuming you hold it as well. Now, what happens when the market is that, you see, when the market goes a little bit sideways and slowly trending downwards, and now the price is 3,230. So from your starting point, which is here 2,940 up to 3,230. So here your profit is actually have 290 points. So earlier it goes up, you initially have 450 points. Now you only have 290 points. So here you can see you're already like lose out 100 over points already. Now, question for those of you who are still having position, will you be continue to take profit, hold, or do nothing? Okay, for those of you who still have a position, will you hold, take profit, or do nothing? Hey, your profit evaporate already, from 11,000 now still left 7,000. It's not easy, Now, okay, for those of you, I see most of you still hold. However, for those of you who have no position, would you buy or would you do nothing from in the market? For those of you who have no position, would you buy, have another entry, or would you try to short the market here? So most of you buy, some of you buy even more. Majority would buy again. Okay, interesting answer. Now, some of you short so far short. Okay, now let's say the market moves again. It goes up, further up. Happy lah for those of you still holding, right? Now the price here at the peak is 3,870, which means from the bottom 2,940 up to here, right? You got 930 points already. Now, question for you of those of you who have position, who still hold since initial stage, and for those who have just take profit, would you still take profit, or would you do nothing in the market? So let me know your answer. Would you take profit, would you hold, or do nothing? Some of you take profit, some of you hold, most of you hold already, no longer. Some take profit half. For those of you take profit half, especially if you have one lot, how to take profit half, it's not easy, right? Now, let's go again. Let's say the market comes down already. And let's say, okay, according to the earlier moving average rule, right, when price closes below your moving average, so we identify it as downtrend, right? So we close our long position. So here we exit this particular situation. So here we have already gained 3,420 points. So in short, if you were earlier, you buy at 2,940 and you hold up till here, you got 480 points. Still not bad now compared to exit one time earlier here, as well as those who exit at this point. So here you can see that even though, although it is just a quick trading simulation, just by trying to make this trading decision is not easy, because you can see by your trading profit itself, it is actually fluctuating, and it is not just fluctuating weeks. It is every day. At the end of the market, you would see that your profit fluctuates up and down. Some of the days you have more profit, some of the days you see that your profit is actually evaporating, getting less, and you may be wondering or getting panic already, whether should I take profit now or not. Okay, so if for those of you who are able to hold all the way up to here, congratulations, you managed to get 480 points. Whereas for those of you who exit at this initial stage, don't worry as well, because which is why today's session is very important for you to understand how to actually sit through the whole situation and follow your trading rules, especially if you do a trend trading. Now let's move on to this. As you can see, this cowboy is riding a horse, right? Now, question for you is that you need to ask yourself very, very honestly, are you able to ride along with the trend or not? And the next question is, are you actually comfortable holding position throughout the trending period? Because many of you who are able to ride along the trend just only very short term, but not medium term and not long term, because it is not easy. You have to sit for a little longer a while. So when you ride the trend, you will be experiencing price volatility as well as fluctuation. So sometimes you will experiencing that your profit evaporate. Uh, and sometimes you will be experiencing that you might afraid of a gap opening, retracement, or short-term pullbacks, or even news that is coming up from the market. So these are the things that you are afraid. So back to our main theme is that most people have a love-hate relationship with trends, right? So now let me know, you love it when what trend that you are actually having, and when would be the time that you actually hate trend. In fact, you will be surprised that a lot of people they would say love it when they got trend, hate it they also trend. But in fact, I would summarize most of your answer would be that you love it when you make money, even though you are at the wrong direction. Correct? You love trend when you make money, even though you make the wrong decision or wrong direction. But you hate trend, and you also hate it when you lose money, even though you are in the right direction. Okay, I repeat. Most of the people don't like trend when you lose money, even though you are at the correct direction. Okay, so you can see there is a love-hate relationship that is happening in this moment when you ride along trend. But don't worry, we are coming very soon. And now, when it comes to finance, right, or trading, there is one theory which is what we call the risk-return trade-off. So it says something very simple. The high risk means high return, low risk means low return. Now, do you understand what is risk referring here or not? And do you understand what is return referring to? Now, earlier on when I studied finance, I don't really understand. I thought risk is standard deviation, or risk is losing money, correct? And return means make money, but in fact, it's not true. Now we are going in a little bit more comprehensive understanding about the definition. Now, for risk, it actually means volatility as well as fluctuations. It is a very neutral word. Okay, risk is not losing money. Risk referring to volatility and fluctuations. And remember earlier I mentioned that it is important that you are in the correct direction. Then you don't have to worry about risk so much. And what does return actually means? In finance, return is actually a two-way word. It can refers to positive return. It can also refers to negative return. Positive return means making profit, and of course negative return referring to making losses. So here, in short, in this theory is that yes, if you want to take a trading or a trading strategy that is low risk, you will definitely be facing lower volatility, and then your chances of return, either making money or losing money, would be relatively small because of low volatility. Can follow? And if you would want to use a trading strategy that is high risk, meaning that strategy would be facing high fluctuation, that strategy would be facing high volatility, and of course you will be rewarded by high return. And your high return means that you will be facing a huge profit as well as huge losses. Okay, so this is what we actually mean by high risk, high return, low risk, low return, where your return can actually go both ways. Now, let me give you a quick 3 example here. Which of this scenario that you would be preferring to put in your money into? There would be scenario 1, scenario number 2, as well as scenario number 3. Which of this scenario that you would put your money into? Just type into the comment box below and let me know whether you want to put your money, where you want to put your money. So most of you would put your money in scenario 2, very few on scenario only 1 or 2% in scenario 3. Nobody want to put in scenario 1. In fact, there are people who put in scenario 1. Let me tell you what is scenario 1. Now, let's go through one by one first. Scenario 1, let's say you are investing or trading or holding a position. What happens when there is no trend throughout the period? So here we have an y-axis, which is the value of your investment, whether you're making money or losing money. X-axis would be your time. So let's say in year 1, let's say you invest 100,000 here, and year 2, year 3, same. It does not changes the price, no changes at all. So along, throughout 10 years, the value, the things that you buy here, no changes in value. Are you happy or not? So some of you might say, okay, no problem, because there is no volatility, there is no risk, right? And some of you might be saying that, since there is no return, I might as well put the money in FD, EPF, or even mutual fund. Some of you say scenario 1 is acquire the company. Okay, interesting. Now, some of you would say, scenario 1 is something like would be like you buy an antique where you don't expect your antique would increase value in a short term or long term, but you believe that even if you hold that particular antique for a very, very long term, it would be worth a lot of money. Okay, so there are people who actually invest in scenario 1. Okay, this is mostly on antique. Now, scenario number 2 is that same thing. You invest 100,000, but year 2, your investment value comes down less than 100,000. Year 3 recovers back to 100,000. Year 4, year 5, year 6, year 7, year 8, or year 9 comes down again, and then year 10. So here we can see that, of course, if we compare scenario 2 with scenario 1, right? Scenario 2 consider is as having higher volatility and higher return. So of course, this is actually especially true when you try to invest or trade by yourself, and you wish that at the end of the 10 years, your wealth actually grow. And the third scenario, same thing, also 10 years, where you invest 100,000 first, and then each and every year you can see that it's actually quite a boring investment, where the volatility is actually moving very, very slow. And at the end of the 10 years, the return may not be as fantastic as scenario number 2. So scenario number 3 would be like a typical example where you invest in FD, money market fund, or bonds, or even mutual funds. Now let's go back to our main question here. Scenario number 1, in short, is there is no trend, no volatility, of course there would be no return. So if you want to take zero volatility stuff, of course do expect that you have no return. And scenario number 2, there would be a big trend, and of course the big trend, we do not know how big will that trend be, right? And the volatility would be an unknown thing. So here we can say that scenario 2, there would be high risk, or in other words, if you change your word risk into volatility, means that there will be higher volatility. It also means that you will be experiencing a higher return, and this higher return is not profit. Okay, higher return can go having profit or having losses as well. And scenario number 3, which is small trend, which is lower volatility, lower risk, and in short, you will be having lower return. Now, of course, all of these 3 scenarios with an assumption that provided you are holding the position in the correct direction. Okay, so you need to accept the outcome for the volatility that you choose, regardless of whether you choose scenario 1, scenario 2, or scenario 3. Whichever return that you receive from the market, you need to accept the outcome, okay, because of the volatility that you choose, because of the risk that you choose. You cannot say that, if you choose scenario 3 and then you expect that you can have scenario 2 performance. Cannot. It very rarely happen that way, okay? And most of you would choose scenario 2, correct? And because of higher return, and you also cannot expect that with higher return, you can have very, very low volatility from whether it is stock or futures that you are trading. It won't happen that way. So we go back to the very standard finance theory, which is high risk, high return, low risk, low return. And this theory, you know, stand through the test of time, and it is still true today. So in short, you need to accept the outcome for the volatility that you choose. Don't blame the market. Don't blame politics, or whoever is the new Federal Reserve chairman. So be in charge and take responsibility for your own investment decisions. Take charge of your own investment as well as trading education, because ultimately it will be you are the one who is actually making the decision, and you are the one who will be accepting the outcome. Now, of course, another one, which is the paradox between trend and volatility, is that the price don't go up in a straight line. And of course, I also wish that price do go up in a straight line, but in reality, it doesn't happen that way. Because why? There would be people taking profit from the market. So you can see early on through our quick trading simulation, some of our participants here who has already taken profit from the market. So they are the one who is actually causing the price to come down. So you can see that price actually does not go up in a straight line, because different people have their own reasons of entering and exit the market, and they have their own trading or investment objectives. Some of them would be, you say, okay, it reached my objective of making 10,000 already, so I get out from the market. It reaches my goal of making 100 points, I get out of the market. Whereas for some of you, your objective might be is that, oh, I suddenly need the money, so I want to cash out, sell out my position, close my position, and take my money. So there are a lot of factors that is causing the market price to come down. Okay, so it is not because of manipulation or big players that are manipulating the market. No, okay. So I have just only explained why the market price comes down or why the market price goes up. Okay, it is mainly purely based on demand and supply. So same thing, this applies to your trading performance. Your trading performance is very closely related to the price that you're actually holding position in. It does not go in a straight line, and it is actually a zigzag pattern. So let me show you a quick example here. Now, a quick case study here, you can see that this is actually a performance of a trend trading system in the FCPO market. And this yellow line is what we call the equity curve. Or in other words, is your accumulated profit and loss from your trading according to this very mechanical trading strategy. Okay, very simple one, which is a moving average. Now, and this is actually using an intermediate time frame, which is the medium term moving average in terms of the trend following system. Now, can you guess what is the winning rate for this particular system or not? How many percent of this system is actually having a winning rate from the market? Can you guess, or maybe you know the answer already? What is the winning rate for this particular medium-term trend following strategies? Some of you put 60%. Some of you no idea. Okay, let me show you, tell you is that, for this particular trading strategy, the winning rate is actually approximately 40% only. Okay, don't get me wrong, this is correct data. It's actually 40% only. So if, let's say, if you were to backtest this particular trend following system, the winning rate is actually just only 40% only. So which means that in 100 trades, only 40% of the time you're actually making a winning trade or making money. However, the important thing that you need to know is that although it is just only 40%, right, you can see that the accumulated profit for this particular system is actually heading upwards and actually making money from the market. So in fact, when it comes to trend trading, you don't really need a high winning rate in order to make money, even though winning rate of 40%, you can still make money from the market. Okay. Now, this is actually the trend trading using technical analysis. Now, how about trend trading method using fundamental analysis? Another quick case study where this is actually the performance of our local mutual fund, a 10-year performance. So the blue color line is actually the mutual fund performance itself. And the red color line is actually the benchmark lah. So depending on which benchmark they use, it can be a mixture of KLCI and bonds. So here you can see that mutual funds, they are actually using fundamental analysis, right? And fundamental analysis, earlier I've mentioned to you already, fundamental analysis also emphasize and focus on trend. You need trend to make money, regardless of you using technical analysis or fundamental analysis. So here we can conclude that technical analysis, fundamental analysis needs trend to make money in the market. And the most important thing is that you can see earlier on for technical analysis, trend trading strategies, it does not move up in a straight line. Same thing for fundamental analysis trading method, your price also does not move up in a straight line. It is a zigzag manner. So in short, you would need to learn how to ride the wave. However, if you would want to learn how to surf, first thing that you need to learn is that you need to how to swim in the water, as well as learn how to survive in the water. And of course, even if you know how to swim, right, in the swimming pool, right, the situation, the current in the swimming pool would be entirely different from swimming in the open sea. So these are the things that you need to relearn again how to survive in the ocean. Okay, so important thing, before you learn how to ride the wave, first you need to learn how to survive. Now, lastly, on topic 4, tools for trend trading strategies. As I've mentioned earlier, today we will actually not focusing so much on the strategies of trend trading, because I believe a lot of you knows that already. And the most important thing is that you need to understand what is the concept behind trend trading, what is the philosophy behind trend trading, and why trend trading is it sounds so simple, but when it comes to application, it is so hard. So in topic 3, I have already cleared some of a few common misconceptions that you might have in trend trading. Now, on topic 4, there are several tools in technical analysis, and of course, this is modern tools. And modern technical analysis, we generally use technical indicators. You don't have to draw a line anymore. Now, there are generally 3 categories of indicators. Okay, 3 general categories. There are trend indicators, which are moving averages, bands, channels, Keltner channel, Bollinger Bands, Donchian channel, and so forth and so on. Momentum in the category of indicators, we have MACD, we have momentum, as well as oscillator category of in technical indicators, where you have RSI, stochastics, Williams percentage R, and more. Now, can you tell me which of these indicators that you are currently using? Share with me what are the indicators that you are currently using. Maybe you use one of them, or maybe you use a mixture of them. Share with me what indicators that you are currently using. I'm curious to know how do you actually make your trading decision. So I see most of you use moving average, some moving average RSI, some combination of Bollinger Band and RSI. Some use 3 indicators, that's interesting, MA, RSI, Bollinger Bands. Some DCI and MA, some combinations of that. Perfect. Now, here, of course, when you use in technical trend trading indicators, right? Since today's topic is on trend, right? And I've already, categorized what are those indicators here. Of course, when you want to do trend trading, the most important indicator that you must have is, of course, trend category of indicator. momentum indicator and oscillator is not a good indicator for doing trend trading because they have their own disadvantages as well as weaknesses. So generally for trend trading indicator, you can see that, when you insert those indicators, right, it will be directly on your price chart itself. A trend trading indicator will be directly on the price chart itself. Whereas for momentum and oscillator indicator, when you insert momentum indicator or oscillator indicator, it will be at the bottom of your chart. Okay, it's very simple only. Okay, can identify that? Very simple. I repeat one more time. Trend indicator are those indicators when you insert it, it will be directly on your price itself. Momentum and oscillator indicator, when you insert this indicator, it will be underneath your chart. Okay, so this is a very simple thing for you to identify which is trend indicator, which is momentum or oscillator indicator. Now, most important thing is that when you want to do trend trading, just focus on trend indicators alone will do. Okay, you do not really need to combine with momentum or oscillators. Sometimes you combine indicators, it might confuse your decision making. And why do we need to focus on trend indicators? For example, like you use, I see most of you use moving average, right? So for moving average, right, the trend sometimes can keep showing uptrend, whereas your momentum and oscillator, right, can be showing overbought, it can be showing oversold, or giving you a sell signal. Okay, but ultimately, how you do your trading is that whichever trading method you use, you would still need to focus on the trend method by looking at the trend. Okay, because why? You would still need a trend to make money ultimately. And momentum and oscillator, they actually just mention about the strength of the direction or the strength of the direction only. It never mentioned about the direction of direction. Okay, so clear? So focus on trend trading indicators, and most importantly is that, technical analysis, especially when it comes to modern technical analysis, you can actually do back testing in all of your indicators. Okay, you can do back testing in your indicators. What does back testing mean is that you use that particular indicator and see what is the performance throughout the history, okay, according to your trading strategies or trading rules, to test out what in the past, what is the performance for that particular indicator. So after you go through back testing, you are able to see what is the performance in there. And this also indirectly, if an indicator shows you a very profitable method for you to trade, then of course you can use it. And this actually indirectly gives you a confidence to hold through the whole trend, regardless of a volatility in the market. All right. Now, one last concept that you need to know is that there are foot carving tools as well as foot carving skills. Most of the people, they focusing too much on the tools. They want to get the best tool. They want the sharpest tool available in order to do their foot carving. But in fact, if you are, let's say, a carpenter, you need to focus on your carving skills rather than the tools itself, because it takes time for you to improve as well as perfect your skills. So same thing applies to trading as well. Indicators or trading tools, those are just tools only. All you need to do is actually focus on building trading strategies as well as skills, so that you can actually use these strategies and skills to trade the market, because tools itself are just only tools, right? Indicators that you insert in the market or on your chart is just only indicators. It does not do anything. Only trading strategies as well as your trading skills are the thing that is actually going to make you decide whether you are going to enter the market or exit the market or cut loss. Okay, so that's about it for this chapter 4. So let's conclude on the 5 key takeaways for you today. Now, number 1, all analysis focusing as well as analyzing on trends, regardless of technical analysis or fundamental analysis, both focus on trend. Trend comes in terms of all types of time frame, primary time frame, secondary trend, as well as a minor trend. Remember, the three types of trend is primary trend, secondary, as well as minor trend. It goes by time frame. If you say up, down, and sideways, that is actually just only direction for your trend. Thirdly, trend comes with volatility, fluctuations, and ups and downs. So these are the definition of trend. We can't avoid it regardless of whatever time frame that you are trading. You need to accept the nature of trend, because trend is something very, very neutral. It does you nothing. The most important thing is that you need to build and develop your trading strategies as well as your trading systems, so that whenever you follow your trading system correctly, all you need to do is to ride the trend, be patient with the trend. Trend takes time to develop and sit through the whole trend. So several tools for you to do trend trading, that is, you just only use trend indicators or tools that only show trend. The rest of the tools that don't show trend, you can actually set aside. You don't have to use that. And lastly, instead of finding the perfect tools, for example, I believe a lot of people, maybe you are still having this same practice till today, right? Finding the best trading tools available out there, finding the best trading software or charting software out there. But instead, I would highly suggest you to actually focus more on your time in, building trading strategies as well as skills, because these are the things that is going to last you longer in trading. Okay, so that's it for today. And one last thing before we go to the Q&A is that, good trading psychology begins with having the right education and the right knowledge. So today we have already gone through the knowledge on the philosophy of trend trading. So this is where you can see that once you understand the philosophy, the knowledge behind, right, it can actually, settle or remove a lot of, the psychology, unnecessary bad psychology in terms of riding the trend. Okay, so that's it. I pass this back to Ting Ting.
Okay, very informative presentation by CY. I believe many of you learned many new information or new knowledge this evening. Am I correct? I believe that is your perception. Now, before we start with the Q&A session, please remember, just type in your question in the Q&A box and send it to all co-hosts. While waiting for your question, can you please spare us 1 minute of your time? Very shortly, there's nothing that we requested from you. The only thing that we requested from you is, can you please give us your feedback? Now, please scan this QR code, or else in the chat box, you can click on the link and please provide us with your feedback. That's the only thing we require from you. Now, very fast, only a few questions. You just give us 1 minute of your time, scan the QR code, or in the chat box, click on the link. Last 30 seconds. And we are going to move into the Q&A question. Okay, I believe we have finished. Time's up. Now, if you're not yet finished, don't worry, you can still continue to finish the feedback form. For those who already submitted your feedback form, thank you very much for submitting your feedback. Because the feedback will help us to make the session better for the next session itself. Now, coming back to our Q&A session, I repeat, for you to submit your Q&A, please do not submit in the chat box. What you need to do is step 1, you just select your Q&A, then subsequently you type in your question, then you just need to select all co-hosts and you just click send. So once you click send, our side, we are able to capture it. Now let's start with the first question. This question is a bit long. Maybe I separate into 2 parts to ask you, CY. The first part is, can I combine trend indicator, momentum indicator, and oscillator? Because just now you subcategorize into 3. So his first part of the question is, can I combine all?
Depending on your trading strategies, because if you are doing there, okay, generally when it comes to trading strategies or trading system, right, there are generally two categories. One is that what we call the mechanical trading method, as the other one is called discretionary trading method. So mechanical trading method is very simple. It's follow a very rigid rule. The most important thing is that you need to backtest on it. Whereas for discretionary trading method is where you can do you can have insert your own independent judgment in terms of trading. So when coming back to your question is that whether can you actually combine 3 indicators, is that if you are doing mechanical trading method, yes you can, but make sure that you follow all the rules accordingly. But since for this question, right, I would generally assume that you are actually wanting to insert your own opinion or your own interpretation in trading the market. So I would highly suggest is that just focus on the trend trading indicator itself is good enough. Because, for example, let's say a market is very strong, it is still uptrend, price is still above moving average, still showing uptrend, right? Your oscillator, which means, for example, your RSI or stochastic, can be still showing an oversold. So this is where which of this indicator that you're actually going to following. Are you going to continue to follow your trend indicator of holding your long position, or are you going to follow your oscillator of sell decision? So this one you need to be very, very clear of in developing your own trading strategy. So earlier, as I've mentioned, don't focus on so much on trading tools, because trading tools are just only tools, right? So ultimately, we want to focus is actually building strategies around our tools, and most importantly, to build a trading system that is actually more comprehensive for us to trade.
Okay, the next part, which just now you answer a bit, I'm not quite sure whether you want to elaborate further or not. His second part of the question is, what happens if I combine the 3 categories and use it together besides giving mixed buy or sell signals?
I don't quite really understand the question.
Any other things that will happen if he combine the 3 categories? So besides just now what you already mentioned that will give a mixed buying and selling signals, is there anything that will happen or not?
Okay. For mixed signals, right, there is this one in technical analysis we have another solution to solve it. Very simple. Let's say if you want to use combined indicator, right, there is one thing is what we call the polling or the voting rule. So majority wins now. So if there is 2 buy 1 sell, so ultimately you can have a buy decision. If 2 sell 1 buy, so this your ultimate decision would be sell. As simple as that. This is what we call the plus minus or the scoring method.
Okay, the next question, very common, always being asked when it comes to technical analysis webinar. The question is, what period moving average should we use for intraday trading? So I believe the question is asking about the parameters.
Yeah. When it comes to asking parameters, This is actually a simple question, but it's very, very hard for me to answer because as I mentioned already, knowing what tools to use is actually the very, very beginning step only. The most important thing is that from that tools itself, you need to develop trading strategies and then a trading system. So for example, it's easy to say that, it's easy to just give you an answer that you can use, for example, 20 days or 50 days, which this is actually a commonly used parameters for moving average. But the challenge here is, do you understand why do you use 20 days or 50 days, for example? And what are your trading strategies for using 20 days or 50 days moving average? So you need to be able to develop a well-defined trading strategies out from there.
Okay. The next question is, what is the best time frame, as usual, what is the best time frame in chart for entry and monitor the price?
Best time frame. There is no best time frame. It would be okay when it comes to trading. If the general rule it should be the other way around. What would be your lifestyle, and then what is your current lifestyle in terms of working, whether do you have time to monitor trades or executing your trades, then that would be the best time frame for you, because there is no one standard answer in terms of answering time frame. Because if for a person who is very free, very full time, doing nothing, so doing intraday trading 1 minute, 5 minutes, or even 1 hour time frame might be suitable. But if you are quite busy in terms of your working lifestyle, then you can actually focus on position trading or swing trading that is actually holding a position rather than doing intraday trading. So when it comes to holding position overnight, so of course for that we will be just only looking at daily chart, right? So daily chart, depending on what strategy that you would build for yourself, then there would be short term, medium term, as well as a long term strategy. So focus on the strategy, then the time frame automatically will come by itself.
Okay. The next question, I'm not quite sure whether you want to give your view or not. Maybe slightly not really related to today's topic, but is also still under the technical analysis part. So the question is, does price action really works?
Okay, price action. Price action is actually it's actually for recent years they only use this word price action, right? I think recent 10 years people use price action, this word. We need to define what price action really is. Are you actually referring price action towards to changes in price or movement in price, or price movement? In fact, when we use the term in price action, right, it is actually very simple. It's actually referring to price movement. So when we mention about price movement, we can, for example, say that there are price patterns in chart like head and shoulders, double top, double bottom. Those are actually considered qualified to be said as a price pattern already. So those are a little bit more secondary trend or primary trend of price action. But if it is a price action that you are referring to, which is very, very short term, so that would be actually depending on what kind of short-term time frame that you're using. For example, if you are using 1 hour chart or 30-minute chart, I believe that specific time frame itself, it also has its double top and double bottom. All those chart patterns comes in. So those are price pattern as well. And another even shorter price action is actually your buy and sell transaction. So those are what we call, in olden days, they call it tape reading. So by just looking at the bid and ask trading code as well as the transaction itself. So those are another form of price action. So in fact, all actually works lah. still need to mention price action works. It depends on whether does the strategy work or not work.
Okay, the last question we're going to take for tonight. Some of this question is a bit long, but let me separate for you to answer. But he just required your view. So his question is like this. To ride the trend for a day, I believe you need more lots to trade. For example, enter 3 lots, take 1 lot profit after first wave. Let the next 2 lots to go on, take second lots after second wave, and the final third lots when the trend reverses. So meaning more capital required. So what is your view on this? So he's partially taking profit. So I believe his question is on whether should we take partial profit along the way? Is it the correct method to do or not?
If it is built in your trading strategy and you are comfortable, most important is comfortable, and you are happy with the performance, then that would be a correct way to do it. And if you would want to, let's say, improve this method of trading, then you can ask yourself, because now you're using 3 lots, right? For example, let's say if you use, times 2, 6 lots, 9 lots, or 30 lots, would you still be doing the same, using the same strategy to trade the same way? And oftentimes I will get an answer from people is that, wow, 30 lots to trade this same way, maybe not. Then this is where you may want to begin to stretch your trading strategies already. And another view on this is that if you are confident in your trading strategies, why not just hold 3 lots all the way and be comfortable with the exit method of your trading strategies? This is actually another method as well. So I assume that you have essential knowledge as well as trading experience on this. So just test around. So I believe you also tested on taking partial profit on it, right? So you can also, trading is more of a pragmatic as an experiential process to find out what is best and right for you, and whether you are comfortable with it, with the volatility, and whether you are happy with the performance. So with that, when you find something that is just fits you very, very nicely, then there is no harm to continue to use the same thing, because what works, continue to do continue, what does that term called, continue to do what works. That is the most key thing in trading.
Okay, thanks a lot for CY to answer all the questions. Now, let's continue, and we are going to wrap up. For those who may have submit your feedback form, appreciate for you to submit it. And thanks for those already submitted your feedback form. Now, just to highlight to you, upcoming subsequent week, every Tuesday, we still are going to have those webinar sessions in 3 different languages, from Malay, English, and also Mandarin. So coincidentally, our subsequent 3 sessions all are in Malay, English, and Mandarin. So each language, we are going to have 1 session. You can scan the QR code to register accordingly for any topics that you would like to attend. Now, for those who want to attend, you scan the QR code, you're going to lead it into our calendar. So you can see that you can select based on the Tuesday itself. So you just select the session that you are going to attend, click on it, and you can register accordingly. For December session, what you need to do is when you land on our event page, they are going to reflect to you the November months. So what you need to do is you just need to click on December. So once you click on December month, you're going to have the December calendar. Then subsequently, again, you select on Tuesday, select the session that you would like to attend, and click on it and register accordingly. Now, this one is just to highlight for those beginners, if you're not quite sure whether you understand futures and what would really seriously want to kickstart in futures trading, you can join this online workshop. So this will be the last session. For those already attended previously, you can snapshot and send it to your friends and ask them to join, because you must learn before you start in futures trading. So we have 2 workshops. The first workshop is the complete guide for beginners to futures trading. And the second workshop is how to create an effective futures trading plan. And you can see that both sessions, we are going to incorporate trading simulation and to make sure that you can kickstart your first futures contract. Please register as soon as possible before the seat is running out. Now, this is the session, the 27th of November. You can click and submit accordingly. Now, before we end the session, just to introduce the Bursa Academy. So this is a comprehensive one-stop e-learning platform. It's very user-friendly and you can accessible anywhere, anytime at your own pace. So to access to this particular Bursa Academy website, you can scan this QR code or else you can go to bursaacademy.com, Bursa Marketplace, bursaacademy.bursamarketplace.com. So this brings us to our last slides. Thanks, CY, for your nice presentation. And thanks for all your participation. For those who are attending for tomorrow's FIBO webinar, we are going to see you tomorrow. Thank you very much and good night.